Afternoon, Blair Applegate coming to you Tuesday, August 8th, 2017 for this week's edition of the Bull and Bear Show. And we have a bull, a bear, and this week a steer to talk to you about. Those are the top three things. Let's just jump right in with this week's first thing to talk about, which is oil. Oil, I just paid $2.85 at the pump last week. I'm curious what you paid. Send in a note with what you're paying for oil and gas. I'd be interested to find out. Oil basically just failed at the top end of its range, hit 50 bucks and pulled right back. It was down 1%, I think, yesterday, and pretty much flat last week, down a couple ticks, and basically 14% down year to date. And oil's first cousin, natural gas, is down 22% year to date. So the commodity complex in general has been getting hit pretty hard. And so oil is the first thing. It's made a lower high. It's bearish trend, so not looking good right now in the oil and gas sector. And that's not surprising. We had the peak inflation in the first quarter, and it's kind of been downhill since then. Second thing this week, our number two spot is our bull for the week, bull with two horns. And that is earnings. Earnings really are what's driving this market, right? We've seen all-time highs in the NASDAQ, the S&P 500, the Dow Jones, and the Russell 2000, all within the last week. And what's driving that? Is it, fake news? Is it politics in DC? No, it's not. It never is. That stuff affects on a short term, but that is not what's driving the market right now. In fact, hard data is what's driving the market. So check this out, right? So we are reporting Q2 numbers right now. You get Q2 numbers in Q3. We're in the beginning of Q3 here in August. And so we're just a few days away from the end of earnings season, and S&P 500, I think we've had 425 companies of 500 report. Sales are up 5.5%, earnings are up 10% for the quarter. NASDAQ, earnings up 10%. Sales up 10%, earnings up 13%. Any wonder why the tech sector is the best performing sector year to date, up, was it 19%? No, it's because of the earnings. It's not because of politics. It's not because of the news. It's because of earnings. And in fact, FactSet, which is one of the groups that collects and reports earnings information, has said that they've had the best record earnings estimates and positive guidance, and the amount of percentage that companies are beating their estimates by on record in all the time that they've been collecting the data, which goes back 20 plus years. It's the best quarter on record. So I know sometimes we want to be bearish, and there's an old saying that a bear market climbs a wall of worry, but the bottom line is that it's positive earnings that's driving this market right now. So that's our bull, right? And then now let's talk about our steer for the week. If you're not a bull, you're a steer, or you're a cow. And I'm not sure if it's better to be a cow or a steer in that situation, given the fact. But the steer this week is North Korea. Just had some headlines come out at the end of the day today. North Korea saying our government threatened North Korea, and so now the video news channels are just all over it. It's all you're going to see for the rest of the day. Hey, do yourself a favor. Go out and have a nice dinner, because if there's a nuclear war tonight, at least you will have had a nice dinner, right? And the bottom line, if there is a shooting war, the only thing that it means is there's going to be a lot of people suffering, and you can never get out of the way of that fast enough. If you don't already have a conservative portfolio and basically own a lot of cash, treasury bonds, and gold, it doesn't matter. But then if that's all you own, you're going to be like, hey, why am I missing out on record earnings in the market, right? So at the end of the day, our steer for the day is North Korea. That guy's kind of a steer, right? He likes to talk a big show, but we don't know if he really has the equipment to do the work, right? And that's what a real steer is. So if you need more info than that, just look it up or Google it, but don't check the pictures. Finally, last thing you should know about here, one more thing. We try to give you one little strategy or planning tip every week, and that's for the week. This week, it's the HSA plan, health savings account. If you don't have one of these things, your company doesn't offer one, talk to the boss, right? If you're the boss, you should get one of these for your company. What does it do? Hey, it's a triple tax benefit. right? Money that goes into your health savings account, first of all, it's a deduction for the company to have one of these if they're putting any money in for the owners. If you're an employee, that money goes in, you don't pay taxes on it, so it goes in tax-free. Then when it's in the account, it grows tax-free. That's tax deferred, right? And then when you take the money out, as long as you spend it on medical expenses, glasses, dentist, going to the doctor, surgery, hospital, as long as you spend it on a medical expense, you don't pay any income tax. And when you get to be 70 and a half, you don't have to start pulling that money out, right? You can keep all your money in your HSA account until the day you pass away, and then you can leave it to your heirs, and they can spend it on tax on medical expenses. Sorry. So if you don't have an HSA, you need to ask quick, how do I get one of those? How do I set one up for my company? Because it's pretty much a no-brainer. Anytime you can beat the government triple tax-free, you want to do that. So that's our week for the week. Oil, bearish. Earnings, bullish. Our steer for the week, North Korea. And get an HSA plan. If you have any questions, give us a ring. Thanks a lot. Have a great day.